also be equally volatile, because sometimes you may get some big inflow, sometimes you may get a little lesser money. So given this context of how money flows in, what is required is how do you then manage this, or what is the answer to why most people struggle financially. So like I said, if you have income, that's not the end. In fact, what we generally see is the higher the income, the higher is the propensity to spend, or higher become the aspirations. I mean, you can do your vacations within, say, 50,000, or sometimes even 50 lakhs are not sufficient, right? So what you do with your money is a relative term, which is directly related to the amount of money you have in your hands. So typically people who struggle financially will see that these are the common traits. You have income, you spend, you pay your bills, you incur lifestyle expenditure, and at the end of this, sometimes you feel that, oh, where is the money gone? I mean, my salary has hit the account on the 1st, and by the 25th, people are trying to figure out ki, where did my money go? No savings. So obviously today, I'm sure most of you are getting at least 3 to 4 phone calls on an average a day, whether it's from banks, whether it is from credit cards. Everybody is willing and more than willing to give you loans. So whenever you are stuck where you don't have money, what you see is you get a call saying, I can offer you a loan, and you say, okay, bring it in, because then at least I can tide over this current cash crunch, and when I have money, I'll repay this, and I will continue with my life. Now this is a vicious circle, as you can rightly see on your screens. And sometimes people who are within this are trapped really bad. It's like the old mythology says, like Abhimanyu knew how to get in the Chakravyuh but could not get out. So I think financial traps, or debt traps as they are called, also are something similar. It is very easy to get in, and it takes real courage to come out of it. So how does a holistic financial planning then help you? So one is, since we are talking about holistic planning, it's not just addressing one problem or one component of your money life. If we were to group them, as you see on your screens, we have some 7 pillars that your entire financial life can be grouped into, which is tax planning, insurance planning, investment planning, retirement planning, estate planning. And let me add here, estate is, we are not talking about how do you plan and buy real estate. Okay. Estate planning here refers to how do you manage your wealth in such a way so that after you, your loved ones or your family is able to inherit it in the most efficient and safeguarded manner. That's estate planning. 6th is cash flow planning. And last, but it's just placed last, but in terms of importance, liability planning is equally important. So these are like the broad rooms in the house called money, which have to be taken care of, and each one of them have to be looked at in equal importance, equal weightage. There is a time and effort that needs to be spent on each of these equally, if you want to not struggle financially and get trapped in the vicious cycle which we just discussed in the previous slide. Now, friends, like we said today, obviously, if I were to discuss all these 7 heads together, we may probably require maybe a day to give justice to all these. So today, given the time limit we have, the time that you have promised to stay in front of your screens and give a year to this, we are talking about tax planning. Okay, so let's jump into the subject of tax planning. Like I mentioned at the start, why are we talking to you about tax planning for 24-25 today, March 24? It is still 15 days for this financial year to get over, right? So even before it is closed, why are we talking about the new year? We have tried to list down 5 most relevant and very important reasons, although there could be a dozen more at least. First is, essentially, tax is infamous for disturbing everybody's peace of mind, right? I mean, the moment you get a message or an email from the tax department, and I'm sure a lot of you here would have been experiencing this over the last 6 to 9 months, because the department has got really hyperactive in terms of the communications that they're doing with taxpayers. So the moment you get a message, it's like, oh, now what have I not done, or where have I gone wrong, right? So the reason to start tax planning early is to have a peace of mind. I mean, these are the things you need to do in the year, you chalk them out, and then you start ticking them one by one like a checklist, and you are sorted. Second is disciplined savings. Okay, so here, actually, Jan, Feb, March, while they are the last 3 months of the financial year, many a times these are also known as the notorious quarter for tax savings, because you are bombarded, you get multiple calls from various intermediaries talking about that if you do this, if you invest, if you take this insurance plan right now in this quarter, you can save an X amount of taxes. Now, friends, yes, savings, insurance, investments are required to save taxes. But one point to ponder is it really necessary to do these investments only in the Jan, Feb, March quarter? The answer is no. Do you think if you do it earlier, the HR or finance from your company will say, I'm not going to account for this, I will only accept those investments that you do in JFM? Answer is no. The earlier you do, it only adds to the peace of your mind. Third, power of compounding, that any investments that you do for your taxes, if you're doing it early, you start reaping the benefits of compounding at an early stage. And fourth is month on month spread of tax liability. I mean, it is useless to declare, or you can say save a lot of taxes in the initial 6 to 7 months of the year, and then if you don't do the relevant tax investments, if your company starts deducting more tax in the last 4 or 5 months, it really doesn't help, because your savings will now start showing a volatile pattern. That is, first 7 months high savings, next 4 or 5 months there are low savings. So if you want to avoid this and you want to have an even spread of your tax liability over months, then start planning at the beginning of the year. And last but not the least is, by doing this, you are not at gunpoint being made to invest in some random investments or insurance policies, which otherwise you would have said that I don't want to do this, but just because he's saying that, he or she is saying that you'll save tax on it, I'm going to do it. Okay, so speaking of compounding, you can refer to the table below of how, if you start early, there is a potential to earn slightly better returns on the investments that you're doing. Now, having said this, as diligent employees of various companies that you're working, what are the 7 things that every employee has to do at the start of a financial year? So we've tried to gather this based on not any law or any book, but this is purely based on practical experience over the last 15 to 16 years of seeing how employees behave when it comes to tax planning and tax saving. This guide has been formulated that way. So step 1, what you do is update, review, file your declarations. The stress is on the word file your tax declarations with your employer on time. Whenever the employer sends you a communication that you have to file your declarations on or before this date, don't wait for that last date to come, because then you are only trying to just tick boxes and say that, okay, I'm going to do this, I'm going to do this. Don't do that. Study it, see what are the things you're going to do, fill these declarations before time, because the earlier you do it, it helps your employer to also plan your taxes better and spread the liability over the next 12 months, which again makes your life easier. Second point, declare your choice of old or new with the employer. Now, friends, here what happens is that these whole old and new regime has been going through a lot of changes over the last 2-3 years. So as per the last budget, now if you don't declare your choice, your employer is bound to go with the new regime. Obviously, you have a choice still at the point of filing of returns if you want to change the regime, but then the point is, why not declare it upfront and make your life easy, right? Third, when you're talking about tax planning and filling declarations, focused on the expenditures that you're doing today, which qualify for tax savings. I'm referring to, like, if some of you or most of you have kids who are studying in a school or even a college, and you are paying for their tuition fees, remember that this fees that you pay qualifies for deduction under the income tax rules. So if your fees are already, let's say, 2 lakhs per annum, then my friends, you don't need to do any other investments, at least for the sake of tax saving, because the limit available is 1.5 lakh for tax savings, for which the tuition fees qualify at 2 lakhs. So if it is already over, then why take new plans, right? Fourth, and the most common thing, that employees forget about the provident fund deduction that is happening from the company's end, because that is also eligible for tax savings. Why do you forget this? Because you don't do it voluntarily, right? This is something that gets deducted at source and the money hits your account only net of it. So remember, when you're filing your declarations, that take into account PF. For people who are in the middle to senior level management, sometimes the provident fund contribution itself exceeds the amount of investments that qualify, which is 1.5 lakh, like I mentioned. So if it's already done, again, then you don't have to do anything else. Fifth point, if you want a no nonsense, or you can say no, like if you want your form 16 to be the one source form for filing your returns, and you don't want surprises that your other income, which is any interest income or any rental income, that you want to pay tax when you are filing the return, then you can very well declare this income also to your employer within the declaration, and they will deduct the tax accordingly on the same. If you are not interested in doing step 5, then you need to do step 6, which is check what your incomes are and pay advance taxes on the same on time. There are 4 quarters, 4 instances that are provided to you by the department. Calculate the taxes payable on this. So let me clear the myth here for you, that many employees feel ki hamara to form 16 hai, why should I pay advance tax? Please note that is not the case. The department or the tax law, if I can say, does not differentiate between a salaried employee or a business person. What it says, when it comes to paying advance tax, if your liability is more than 10,000 rupees per annum, then you are liable to pay advance tax. Because if you don't do that, what happens is you are then liable to pay interest on the tax that you pay at the end, that is in the filing of returns around June, July. Suddenly, when your tax consultant calls you saying that, hey, you have to pay this, and you look at the computation and you see that you're paying some 20,000 towards interest. Believe me, as an employee, paying tax kills, but when you pay interest on tax, it really like kills you to the core. No, why am I paying so much interest? So if you don't want to be in that zone, advance tax is your answer. And last but not the least, if you have done all of this, then file your tax returns on time. Now, obviously, July is the date, but if you forget to file by July, December is still your date. Nowadays, like I said, the department is so proactive that in case you have not filed, you will get at least a dozen messages reminding you that you have not filed, please file. So don't ignore those messages. Okay, file your returns, and again, all this is for attaining peace. Moving next, after all the gyan we talked about what you are supposed to do, let's try to jump and understand certain exemptions and deductions, because that's where the cream is, right? Tell me where I don't need to pay tax, or what do I do so that I pay lesser tax, correct? Friends, if there are any questions that you're putting, please note that we will have some time in the end wherein we will be taking up questions that some of you may have. Okay, so don't worry. uh, I'm not pausing right now. I'll be continuing with the flow and we'll take up questions in the end, so that, let me finish my bit and then we take up your bits. So starting with exemptions, first thing is exemptions are the best because under law, these are those, you can say, elements of income on which you don't have to pay any tax. This is bliss, right? That means you can definitely earn some income on which there is no tax. What are the common, or rather most common, tax exemptions that salaried individuals can avail? We are restricting our discussion today to salaried individuals because we believe that is the majority of the uh, people who are attending today. Of course, there are some exemptions available for business people also, but today we are restricting to salaried. So first is, there is a standard deduction. So now exemption is that whatever salary you earn, out of that you are allowed to claim a deduction of 50,000 per year. 50,000 is an amount. Now, let's not get into whether it is sufficient or no, but basically this standard deduction is given to cover various expenses that you may be incurring. For example, traveling daily from your home to office, or let's say if you're incurring expenses on buying clothes, buying books, all these kind of things in relation to your employment to further your professional development. All these costs are covered within this one bracket called as standard deduction. Next category is house rent allowance. Now, what is house rent allowance? So basically, the tax law recognizes that not all individuals who are earning may be living in their own home. They may be staying in rented accommodations. So there is an allowance provided that if your salary now includes a HRA, which is being given so that you can claim, you can pay rent out of it. So to the extent, I mean, there is a prescribed formula given in the tax law which exempts whatever house rent allowance you're getting to the amount, to the extent you spend that money on rent, you can get a deduction against it. Now, obviously, if you are not paying any rent, this allowance is of no use. Just because you have an HRA appearing in your salary slip or your CTC doesn't entitle you to an exemption. Okay, mark my words. I'm saying this allowance or exemption comes to your relief only if you are paying rent. Third is leave travel allowance. Leave travel allowance says that if you are going on chutti or a holiday, then whatever expenses you incur in the holiday, my sentence doesn't stop there. It says whatever expense you incur on the holiday in relation to the travel, which is either you are flying or you are going by rail or you are going by road. So from point to point, whatever expenditure you incur for traveling, that can be claimed as a exempt allowance from your employer. And again, there are like a half a dozen conditions that come with it. Some of you who are regular in claiming this would know what goes with it. People who are not can try to learn this better, and because this is a good tool, because it not only covers travel for self, it also includes travel for family, and family includes spouse as well as children up to 2. Fourth is education allowance. Now, we have deliberately put this here because education allowance is like, as long as you have kids, up to 2 kids, you can directly claim this education allowance. And you won't believe the limits that have been defined by the Act. It is 100 rupees per month per child. That means if you have 2 kids, every month you can get 200 rupees tax-free money from your employer being an education allowance. Okay. Fifth is something very specific and unique to certain industries that, I mean, the most common industry that comes to my head right now is the airlines industry. So employees can get a uniform allowance. So if there is something specific that an employee has to take up as a uniform, and the amount that they spend on it, that can be claimed as an exemption if you get a uniform allowance. If you are going in a general shopping spree and buying fancy clothes for wearing to your office, my friends, that is not permitted as a deduction under uniform allowance. So these are some of the common exemptions. Now, after looking at exemptions, we should go to deductions. Before that, one very relevant question that I saw popping up the chat was, when I spoke about LTA, I mentioned holidays. International holidays, unfortunately, are not yet covered under this. It's only domestic holidays. So the tax law doesn't prevent you from going on an international holiday. What it just says is that if you travel to an international location, the amount that you spend on travel can't be claimed under LTA. Let's come to the deduction bit. Now, while there are many deductions that are available, today we are focusing on the top 6 most relevant, most commonly used, and maybe if I can say most commonly abused sections which are used for deductions. Okay, so first is ATC. Now, ATC practically covers most of the things you do, which is the Provident Fund contribution, the PPF contribution, if you are doing any national savings certificate, if you are paying life insurance premiums, if you are paying home loan EMIs, then the principal component of that EMI, all these tuition fees for children, all these expenses or investments, expenses and investments are covered within the ambit of section 80C. Second is ATCCD 1B, which specifically is a, or you can say is a specific deduction that has been provided by the tax law for people who are investing for their retirement in the national pension scheme. So while actually I forgot to cover it, ATC, the limit of deduction that can be claimed under section ATC is 1.5 lakh per annum. So all these components that I spoke about, cumulatively the amount that you invest or spend, the deduction you can claim is 1.5 lakh. Now, ATCCD 1B gives you an additional deduction of up to 50,000 if you are investing that amount in the NPS. Now, this 50,000 is over and above 1.5 lakh. So for people who are serious about the retirement and who want to start creating a corpus towards it, friends, NPS is a great option available. And NPS has undergone a lot of changes, or I can say has undergone a lot of changes in the last 4 years, which has made it very excuse me, which has made the scheme very flexible, and it should be considered by people who are looking for retirement. So 50,000 is the additional deduction available here. Third is if you are paying any health insurance premiums. Now, health insurance premiums can be paid for self, spouse, dependent children, and you can get a deduction of up to 25,000 per annum. Plus, if you are paying any premiums for your parents, dependent parents, you can get deduction of another 25,000 specifically for them. And if your parents are senior citizens, where I mean that they are aged 60 and above, then you can claim up to 50,000 of deduction towards premiums that you pay for your parents. So if you and I'm not sure if my crowd today has any, but academically speaking, if the taxpayer himself is a senior citizen, he can also get a deduction of up to 50,000 for own premiums and parents ka 50. That means the deduction that you can claim under 80D ranges from 25,000 rupees to 1 lakh a year. Okay, so that's substantial. But my suggestion here would be that don't restrict the premium that you pay for your health insurance to the limit that you get under tax deduction. Be liberal when you're taking your health insurance. I consider that the tax benefit that you get on it is an added advantage. Okay. Sorry, suddenly speaking of deductions, it leading to a lot of cough. I don't know why. But moving to the fourth is ATE or interest on loan. So if you are paying any EMI for an education loan for your own self, your spouse, or any children, specifically if you are paying EMI for a loan on their higher education, the tax laws allow you to claim the interest that you pay on such loans from your income. Friends, you will be shocked to know that there is no limit provided under 80. So if the interest on your education loan happens to be, say, 10 lakhs, entire 10 lakhs can be claimed as a deduction under this section. Of course, there is a cap on how many number of years you can claim this, which is 8. But in my experience, the education loans by itself generally don't go beyond 8 years. So virtually, ATE will give you deduction for the entire term of the loan as long as it is within 8 years. So this is a great avenue available where people who think they can't fund their education using own funds, you can go for the education loan, and whatever interest you pay, you can even claim it as a deduction in your income. Then comes ATU. I generally don't talk about ATU with much excitement because this is basically a deduction that a person who has disability can claim. So this is a benefit kind of extended under the law that if there's a person with disability and they are engaged in earning some income, then they get a deduction for being disabled. So like I said, I'm not very excited about it because obviously we don't want to be in that zone. But for people who are unfortunately already in that thing, please remember that there is a deduction under ATU, which is around 50,000 per annum that can be claimed. If the disability is severe, then the deduction can be as high as 1 lakh also. This is the limit under ATU. And the last is something which is out of this section 80 ambit, which is the 24B. Now, again, I think most of you are aware that if you are paying a home loan, then the interest that you pay in that EMI, that can be claimed as a deduction from your income. And I think today, virtually, people are buying homes on loans because they know that if the interest that I pay, you can claim a deduction. So friends, if you are also planning to buy a home on a loan, assuming that will help you reduce your taxable income, please note that there is a limit up to which you can claim this interest, which is 2 lakh per annum. Specifically, if you are buying a home for your own use. However, if you are buying a home for, say, letting it out, then the interest can be claimed without any limit. But the loss is restricted to 2. So I'll actually pause myself there because it can get a little complicated. Just remember, interest paid on home loans can be claimed as a deduction up to 2 lakhs. So that's the short of tax deductions, which I think every diligent and responsible taxpayer should know and make use of because these are already available. And of course, why they are dearer today is because these are the deductions that are available under the old regime. Speaking of which, we come to old and new tax regime. So among the other things that we discussed, as you see that the old tax regime, there are around 70 tax exemptions and deductions available. And the new tax regime says none of these deductions or exemptions are available. The exception there is the standard deduction on salary can still be claimed by salaried individuals under the new tax regime. So, new tax regime is here for the last 3 years, and commonly we hear people feeling or saying that essentially the way ahead would be that the new tax regime will become the only tax regime available, which means slowly and gradually there is a possibility that the exemptions and deductions that people were availing under the old tax regime, some of which we discussed over the last 15 minutes, is something that will get phased out and everybody will be in the new regime. But today we are still in that zone where you have a choice. Should you go for old? Should you go for new? I think this is a decision that each taxpayer has to take on their own, because there is no single rule or single qualifying element which pushes somebody to take a new tax regime or an old tax regime. But yes, in order to make life easier for you, we have like 2 thumb rules which you can keep in mind. So all those taxpayers who believe that I don't want to do investments just for the sake of tax saving, or you can say the newer generation, if there are if there are, let me rephrase, not the newer generation, if there are people who have joined the workforce in the last 2 to 3 years and are listening to me right now, generally, these people have not yet got into the investment mode. Like, they have not bought insurances for themselves, they're not investing. So for them, the new tax regime is a great tool, because it doesn't anyways give you any deductions towards investments made. So new regime is good for them. Of course, in the last 3 years, in every budget, the finance minister has been tinkering around with the rates. And in the last budget, that is 2023, also the slabs or the tax rates in the new tax regime have been made, the slabs have been made higher and the rates have been made lower for the new tax regime. So how do you decide which one to take? Is you try to simplify that. If we can move to the next slide. If you are claiming deductions which are 1.5 lakh rupees or less, then stick to the new regime. Switch to the old regime. Let me rephrase. If you are claiming deductions up to 1.5 lakh rupees or less, then switch to the new regime. However, if your deductions are more than 3.75 lakhs per annum, then old regime still makes sense for you, right? So, this is theory. Let me just show you quickly on the table how it compares. Before we go there, a quick cursor. This is public knowledge. You can always look up for the rates, but for your understanding, a quick glance through. So as you can see, new regime up to 3 lakh no tax, and the 30% tax starts from 15 lakhs. Under the old regime, no tax up to 2.5 lakh, and the 30% slab starts from 10 lakhs. So how does this transpire when you look at an income and tax? So the next table will show us that. But before you look into the table, these are quick 7 steps, which is what I have been talking, saying that you extrapolate your income, check what is the tax due on this income under new regime. Likewise, do another comparison for all the deductions that you propose to claim, and you check what is the taxes due on the same under the old regime. Compare the two. Wherever the tax is lower, you just go for that regime. Friends, all those of you who are salaried individuals, you have the power to choose which regime you want to go for till the time you file your return. So that means in your tax declaration to your employer, if you have said that I want to go for the old regime, but when you're filing your returns and you have done your computation, suddenly you see that the new tax regime is more beneficial for you, you can switch and opt for the new regime. or vice versa. So don't feel that once you have declared something to your employer, you are bound by it till you file your returns. You can always change, but this privilege, as I call it, is available only to salaried individuals. Business people, are not that privileged when it comes to this. So this table quickly recaps that for a person who has a salary of around 14.5 lakh, if I directly go down, I mean, rest is the way it has got calculated, but it kind of takes into account whatever we said, that no exemptions, no deductions permissible under the new regime. So you will see that at an income level of 14.5 lakh of salary, a person in an old tax regime pays, in this case, a tax of around 1,45,000, whereas under the new regime, it is 1,39,000. That means close to 6,000 per annum tax is lower in the new regime. Plus, the person does not have to do any investments for the sake of tax saving, one. And number two, as the salary amount keeps going higher, this gap widens. So, friends, that's what we said. If you remember the 2 slides back, I was trying to tell you that as long as you are claiming deductions 3.5 lakhs or more, stick to old. Otherwise, starting from financial year 23-24, the new regime is a lot better for people with claiming deductions only up to 1.5 lakh. Now, with this, a passing reference to capital gains. Like we spoke a lot on salary and the deductions. Let's quickly look at some benefits that can be claimed for all employees who are, the slide reads as invest in securities. I would say who have now got very active when it comes to stocks, mutual funds, and even real estate for that matter. So one is, remember that you can claim exemptions under 54F. That is, if you're selling any of these investments and buying real estate using that money, then in that year, you can claim an exemption from the capital gains that you earn on redemptions of your funds or stocks, provided you are satisfying certain conditions that have been laid down under 54F for investment in a new property. But this is very beneficial because generally people have a recall that you sell a house and you buy a house, the capital gains are exempt. This is also, it's not that it's something new that has come in the law. It has always been there, but people don't realize this. Second is, you can always also factor in that when you have to pay taxes on capital gains, the tax laws are, you can say, liberal to you, saying that it's not that you have to pay taxes on only gains. You can set off your losses against your gains, and what remains, if it's a positive figure, pay tax on it. Pay tax on it. If it's a loss, then you don't have to pay tax on losses. So tax harvesting or using capital losses to offset against gains is something that is in vogue over the last 2 years. You can look in your portfolio, check whether you have any losses over the short term, long term. See if you have any short term or long term gains. Pick and choose which of these losses you can offset against these gains and pay tax only on the rest. So this is also kind of a capital gain tax planning that can be availed, or you can say can be availed of to maximize benefits under capital gains. So in terms of, you can say, other things to do or other tips for first time IT return filers, there are like 6 things you need to know. First is that you need to understand if you are obligated to file your return. So every person who is earning income which is more than 2.5 lakh of rupees per annum is liable to file the return. Reasons like, I am an employee, my employer is doing all my tax deductions and I'm getting a Form 16 doesn't exempt you from filing your return. You have to file your return if the income is about 2.5 lakh rupees per annum. For that, what you do is you gather all your documents, you have to do your e-filing of the returns, which happens on the income tax department's portal. Very efficient. The entire process is quite user friendly. See which form fits you, which is the ITR form which you have to fill. Again, each ITR form comes with a heading citing which form to fill for whom. Fill the form, see your liability, pay taxes, and last but not the least, verify the ITR. If you don't verify the ITR within the time that has been prescribed, friends, believe me, the department will say you have not filed your return at all. So don't ignore the ITR e-verification. Only after that your process stands completed. So with this, friends, we come to an end on this, and I'd like to now invite my colleague Anuj, who will also share with you some things on One Finance. So Anuj, over to you.
So I just start with the before I speak anything, I think we just have a quick 1-minute video which will explain a lot of things, post which I'll take not more than 2 minutes to convey what I have to, and we'll move back to Arvind, because I see there are a lot of questions that you people have, and we'll try and answer each and every one of them. Yep.
Hi, welcome to One Finance. When it comes to financial advisory, most people assume it is limited to investment planning alone and helping you grow your assets. Don't worry, we don't want you to open another Demat account with us or start investing your money through us. In fact, we have no vested interest in selling you financial products for commissions, as we don't manufacture any products. The only thing we care deeply about is your overall financial health and well-being. How do we do this? By looking at your financial planning holistically. What does this mean? It means we help you with all the aspects of your personal finance, from your strategic tax planning, investment planning, cash flow planning, liability planning, insurance planning, will and estate, to much more. Become a member with One Finance and get consultations with our team of qualified financial advisors who help provide you with a personalized and holistic financial plan based on your current financial situation, your liabilities, your risk appetite, and the key milestones you wish to achieve for yourself and your family. You even get a quarterly review of your complete financial picture. So what are you waiting for? Just book an appointment with one of our qualified financial advisors and start your financial planning journey today. One Finance. One with your interests.
Investment in securities market are subject to market risk.
So yeah, that's what we do. That's who we are. We're a personal finance planning and advisory organization, and we're focused on offering only advice. We don't do product selling, so we don't do transactions. So you do not worry if there's something that we have in our interest to sell to you. You do not need to have excess surplus money so that you can come to us and we can tell you where to invest. We can also help you with things such as tax, for that matter, right? We can help you file your taxes, help you plan your taxes for the next year with a help of a qualified financial advisor, help you create a will, and of course give you a very holistic picture to your entire financials and help you understand where you are today and where you need to be. So we guide you with the right actions that you can take. It's a very simple process. We have a very good process in terms of ensuring that your data is absolutely safe. Two options. One, you can just scan the QR code that is being presented to you on your screen, and we will arrange for an entire process set up with you. We will call you in your preferred time, and we promise there's no spam. And guide you through the entire process. We'll help you connect with one of our qualified financial advisors who will help you plan your entire financials, no matter if it is tax, loans, debt, liability, credit cards, will, investments, of course. The other option is if you cannot scan the QR code, you can just simply look for the app on your App Store or Play Store. It's called One Finance, numeric 1 space finance, and you can continue with the journey. That's who we are. That's what we do. But I will bring Arvind back to screen because I understand all of you are still stuck on the conversation that Arvind did for you for the last an hour or so. Arvind, we can take the questions that everybody has.
Yeah, sure. Thanks, Anuj.
No problem.
Yes, I'll read out the questions for you, Arvind sir, so that
Okay. Sure.
it's easier for you to,
Yeah,
this up.
that'll help.
You guys can start dropping in the questions from in the chat box. We'll just take it one by one, right? Let's start from yes. Okay, let's start from the beginning. I'm not sure if okay. LTA is only for public transport.
Not really. LTA is for the expenditure incurred on travel while going on a holiday. So, like if you're booking a private vehicle to travel by road from your home to the holiday spot and traveling back, even that can be claimed under LTA, provided you are able to produce the voucher or the bill for the same. So it's not necessarily flight rail. Even road travel is covered in the same.
What about ATG component?
ATG is basically you get a deduction for any donations that you make. So practically there are limits that are available. So it's either 100% deduction or a 50% deduction. Stuff like when you contribute to this PM Cares fund or any funds of national importance are basically the funds where you get a 100% deduction. Otherwise, for most of the deductions that you do, you need to factor in that 50% of the amount is only that you get as a deduction. And the care that you need to take is donations strictly are not to be made in cash. Only by banking modes is when you get a deduction.
What about deduction of insurance premium for my in-laws?
That's very thoughtful for whoever has asked this. Yes, but I think till today the in-laws are not covered. It only speaks about parents. So maybe some representation is needed here so that in-laws are also covered. But you can always have your spouse do the payment and get the parents covered.
I see few questions. I think it's came during the conversation, as in the session slides itself. So if you all can drop the question again related to the topic, that would be much more helpful. Can I claim professional development fees as deduction while filing ITR? If yes, then which section is this?
So if you're a salaried person, then no such deduction can be claimed. Unless you have your organization structure your salary and provide for a reimbursement towards any courses that you may be doing, and you spend that money and show them the bill, that's when you can claim it as an reimbursement. But otherwise, there is no section which gives you a deduction for PDA, right? Professional Development Allowance.
Can we limit PF contribution and use it for NPS? Example, if I have a PF of 20K, can we limit it to 10 and use that other 10 to NPS?
Absolutely. Doable.
In which year can I claim LTA in this case? Book ticket in March 24, but traveling in April 24. Confused due to the change in financial year.
So again, whoever has asked this question, coincidentally, LTA runs on a calendar year basis. So it doesn't matter, you can claim it whenever you want to, because the tax laws look at calendar years as the year for travel.
Can LTA claim on same financial year only? I think just answered the same question. How to save tax deduction on crypto mining? Right now it has a 30% tax on it. What is the other legal ways to save tax on?
Only legal way is stop trading crypto. There is cryptos are not looked at in a very positive way. So today it's a flat tax. So the only way to not pay any tax is not trade in cryptos. That's it. In fact, it is so stringent that if you have any losses, that also can't be offset against the income. You have to pay tax at 30% on the income. So no other ways.
Yeah. Any number of days limit for LTA can claim throughout the year where I take short trips in between the year multiple times.
One trip. So the law says it is 2 trips in 4 years. Now, law doesn't say it has to be every alternate year. In a block of 4 years, you can claim LTA any 2 years. And it is restricted to like one trip in the year. So you can't have short trips and keep claiming LTA. It's only an one. You need to decide which large trip you want to claim. And people who are getting excited about LTA, let me just put a small pin in that. Key, it's only covers the travel cost. Okay. So if you're spending on hotels, stay, food, all those expenses are not covered. It only covers your flight tickets, rail tickets, or if any amount spent on the road transport.
So does it include the same? Let's say I took a flight to go somewhere and there I used a cab for traveling, or I rented a car there.
So it will
It's
not.
again travel.
No. So see, basically the law says it is from your home to the destination. So if you go there and then you travel internally by cab, you can't claim that.
Okay, if we use LTCG gains after selling house to buy shares or mutual fund with it, what will be the tax?
So capital gains on properties, if you're selling it after 2 years, which makes it long term, it's 20%. So you can pay the 20% tax and then you can invest the rest in stocks or mutual funds.
Can we buy real estate within 3 years or within same year? Selling stocks and buying real estate.
That is doable, which so you need to buy the real estate within see now this is gonna be a little dicey because the law says whenever you sell an asset, you need to buy the real estate within 2 years from the date of sale or construct a property within 3 years from the date of sale. Now imagine somebody is selling shares in multiple tranches all throughout the year. So, and that individual is interested to buy real estate, then I would say the period of 2 years, conservatively, what they can do is start counting from the first day on which they have sold the first share. Because otherwise, every transaction cumulatively, it has to be 2 years from every transaction. It's going to become very complicated. So, better to base it to the first sale.
Can we claim deductions on stock market loss while still holding the stocks or mutual fund?
So if the question is if whether can I claim notional losses, answer is no. You need to book it.
House rent and house loans comes under same section or both have different section? Also, which comes under which section?
Interesting. So house rent comes under 1013A, the HRA, and the home loan interest deduction comes under 24B. So both of them are different.
One interesting question. Can I move?
This is the first time I'm coming across somebody who wants to know the section.
Can I move tax-free country to save 30% tax on crypto? Is it the right way or is it practically possible?
So you're hell bent on doing crypto, then you need to move. That seems to be a more viable solution.
If I was in a trip for 1 month, can I claim 1 month expense? Magesha, I think we covered that point that the travel is going to be there. Can we claim interest on house loan before the possession?
No. This is a good question. So interest can be claimed for under construction properties only from the year in which you get the possession. So what happens to the interest that you have paid during the under construction phase? You can take a total of that, and that is allowed as a deduction. That component of interest can be claimed in 5 equal installments beginning the year in which you get possession. But this interest as well as the running year's interest, both put together, the limit is 2 lakhs. So, I mean, as long as it is within that, it is okay.
I'm paying rent in 3 locations. Can I claim all 3 with proof?
I really don't think so, because generally the organization will allow the HRA claim for the city in which the organization is and the employee is. Paying for 3 different locations, I think I'll park this question, because practically I have not come across this situation yet. So I don't want to give a total no, but this can be explored. I don't have a ready answer for this now. Sorry.
Then I will move on to the last question.
Yeah.
Under the new regime, I do not need to upload house rent. Is that correct?
I do not need to
Upload the house rent receipts.
under the new regime. Yes, that's right. And no HRA deduction allowed in the new regime.
Okay, got it. All right. I think there is one thing, if you can have a look at it. I don't think so. You do have the access to the screen. Okay. All right. We're gonna wrap up the session. Yes. Any end notes, Mr. Arvind, if you might have?
So I think passing thing is that tax optimizing or tax planning, tax compliances, I think it's very important that people take it a little seriously now, because believe me or not, the department is really serious. The kind of cross reportings, information sharing that is happening is making it only I mean, the more importance we attach to it is less, but it's very important to be compliant with your the compliances that you ought to do. So I think with that, I'd like to say a goodbye.
All right. Thank you so much, Mr. Arvind, and thank you so much to the team of One Finance for arranging this session for our lovely people at NOAA. And thank you once again for joining the session. I hope you all have a great weekend ahead. And we would look forward to more of these sessions. I hope you have a hassle-free tax planning season ahead, and also the good financial year. Wishing you all a very good financial year as well. So thank you everybody who joined, and have a great evening. Bye-bye.